The largest cannabis company in America just reported the most profitable quarter in its history, $70 million of net income. Here's the problem. It lost money doing it. The entire profit came from a tax accounting entry, and nobody on Wall Street covers this stock. Today, we open the filing and show you exactly what's inside. Start with the top line. Curaleaf did $1.27 billion of revenue in fiscal 2025, the biggest revenue base in United States cannabis. But look at the shape. $1.35 billion in 23, $1.33 in 24, then down to $1.27. This is not a growth story. Prices are compressing faster than volumes are growing. The first quarter of 2026 finally broke the pattern, up 6% year over year to $324 million. Now the number that defines this company. In each of the last 4 fiscal years, Curaleaf lost money before taxes, and in each of those years, it recorded roughly $100 to $180 million of income tax expense anyway. That is Section 280E of the Federal Tax Code. Because cannabis sits on Schedule 1, operators cannot deduct normal business expenses. They pay tax on gross profit, not real profit. Add it up. From fiscal 2022 through 2025, Curaleaf recorded $516 million of tax expense against $402 million of cumulative pre-tax losses. In fiscal 2025 alone, that was an effective tax rate of roughly negative 158%. Here's where it gets aggressive. Starting in 2024, Curaleaf kept charging that tax on its income statement, but it largely stopped paying it. Cash taxes paid fell from $156 million in 2022 to about $27 million last year. The unpaid balance piles up in a reserve for uncertain tax positions, and that reserve exploded from $57 million at the end of 2023 to $588 million 2 years later. A $500 million bet against the IRS on a balance sheet holding $106 million of cash. Which brings us back to that record quarter. In the first quarter of 2026, Curaleaf reported $70 million of net income. The anatomy, a $28.6 million pre-tax loss, flipped positive by a $98.7 million tax benefit. Management reviewed its position with outside counsel and concluded its prior year tax stance would, more likely than not, hold up, so it released a chunk of those reserves into earnings. The profit is real under GAAP accounting, but it is Curaleaf's confidence in its own tax bet, booked before the bet has settled. One part of this business is genuinely growing. Curaleaf International did $172 million of revenue in fiscal 2025, up 63%, and grew another 35% in the first quarter. It is now 100% owned after buying out its German subsidiary, and management points to an implied value of roughly $1 billion. No other United States multi-state operator has anything like it. Now the bear side of the balance sheet. Curaleaf is the most levered major operator in cannabis. It paid $104 million of cash interest last year, about 8% of revenue, and in February it refinanced $500 million of notes at 11.5%, due 2029. The largest debt deal in cannabis history, at a coupon that tells you what lenders still think of this industry. So what happens when the switch flips? On April the 28th, medical cannabis moved to Schedule 3, and Section 280E stopped applying to medical income. The chief executive says 60% of Curaleaf's United States business is medical. Run fiscal 2025 3 ways. If Curaleaf actually paid its full tax bill, owner earnings after interest and capital spending would be roughly negative $73 million. Under today's partial relief, roughly break even. Under broad rescheduling with normal corporate taxes, positive $55 to $90 million. Same company, same stores, 3 different businesses. Now the uncomfortable part. At $9.70, Curaleaf's enterprise value is about $3.4 billion, 12 to 13 times adjusted EBITDA. Its multi-state peers trade at roughly 3 to 5 times. Consumer packaged goods companies, the normal business benchmark, trade at 10 to 14. Apply those normal multiples to Curaleaf and you get roughly $7 to $11 per share of implied value. The stock already sits at the top of that band. The market has priced the happy ending in advance. So here's the framework. The bull case. The Drug Enforcement Administration's hearing on rescheduling all cannabis wrapped up, July 15th. A recommended decision comes next, and management expects adult use rescheduling this summer. If it lands, the tax burden fades, the uplisting completes, and international keeps compounding. The bear case: a federal appeals court could still stay or vacate the medical order, reversing the accounting wins, and no rescheduling erases $588 million of disputed back taxes, which the IRS is already fighting, with interest compounding daily. Second quarter earnings land August 5th. That's the framework. You decide. This entire analysis was built using RoboSystems, an open-source platform that gives you direct access to structured SEC filing data for every public company. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original BARL filings. You can set up the same tools I just used in about 5 minutes. Head to robosystems.ai to get started. Link in the description.